shaping up in U.S. stocks and also in a few currency ideas. I want to share some charts with you. Let's get right to it. The first one I want to start with is a sector comparison of the S&P 500 sectors. And what we're seeing here is energy and finance and discretionary are all three on top here, right? But you see how energy is sort of flattening out and finance is sort of flattening out. We got discretionary charging up strongly, and coming right behind it is technology. So I want to show you something interesting about several of the technology stocks, U.S. technology stocks. All right, so here's the Netflix chart. We've got a red line for resistance, and what is Netflix doing? It's breaking out of it over the past week. How about Google? Well, breaking out of resistance. Microsoft, breaking out of resistance strongly. Overall, all the Qs, the NASDAQ 100, breaking just the past couple of days. Home Depot, it broke out a couple of weeks ago. It is way above the line. Tesla, big breakout just in the past 6 sessions. ExxonMobil, breaking above. Overall SPY, overall DIA. Are you sensing a theme here? A little bit of the move going on Bank of America and also on NVIDIA. Look at all of those. See, now those are about a third to a little more than a third of the top 25 most influential stocks. Meanwhile, check out these 3 stocks. Walmart, Duke Power, NextEra Energy. You see how all 3 of these are not getting above resistance. They're hitting resistance and coming back down below it. What that is telling us is these are defensive stocks. This is where scared money goes to hide. Those other stocks, those are growth stocks. That's where aggressive, confident money goes to grow. And so you look at these and what we see is a pattern of money flowing towards growth and money not flowing as fast to the defensive stocks. That is usually a very strongly bullish sign. I think it means the market's going to go up the rest of the year. And so here we are coming into the fourth quarter. A lot of the earnings, all the big earnings are out now, and the news was good for most of them. I mean, there's some that had sort of mixed results, but generally speaking, it was all good news, and some were really surprising. So from here on out, people are going to aggressively and confidently put money where they think it's going to grow. And that's the pattern we're seeing. All right, except there's one exception to this rule, Apple. Look at the chart of Apple. What is going on here? Apple is one of these technology stocks. It's the leader of these technology stocks. It's really growing out there. There's actually not only one exception. Amazon looks similar to this too, but Amazon's more of a discretionary spend than it is a technology sector play. But meanwhile, Apple. Think about Apple here for a second. It's 20% all by itself of the technology sector. It's one of the 2 most influential stocks. It combined with Microsoft, the 2 of them, wherever they're going together, that's where the rest of the market's going. Look, Microsoft is doing that. Apple is doing that. Huge disconnect. Something's got to give. Either the rest of the market's going to come back down, that's doubtful, or Apple has a big opportunity to run up. I think that's more likely. That's why I think the stock to watch and to play in the coming week is Apple. So if Apple's going to grow, and if the U.S. stock market is going to continue to grow and have that opportunity, then what's the next possible play? Well, let's see if I can bring up this. How about the Usd Jpy, which is 75% correlated with the NASDAQ? And what has happened on the Aussie yen during this same week? Well, a breakout, right? Up we go. Now, last week I had said I thought the Aussie US dollar was going to be a good opportunity. It might dip, but it could go stronger and make a new high. And as you can see, it wasn't as exciting as I thought it might be, but it did follow that pattern. Sort of dipped and then came up. On Friday, it went down. Good chance that is going to continue. And the question is, will it outpace the euro and therefore keep the euro trending lower? I think the answer is yes. If you look at what happened, the Aussie US dollar went down a little bit, but the euro US dollar went down a lot, right? So therefore the euro AUD pair went down even more, continuing that big downward trend. So going long the Aussie dollar and short the euro is probably still a good play for the coming week. But the Aussie yen is also looking good. And then one other one, USD Jpy. If the yen is going to weaken because technology and growth stocks are of interest, and if the dollar is not going to weaken, I mean, have a look really quick here, DXY, the dollar index. For all the talk about inflation, the dollar strengthened. I think that's because people are expecting interest rates to rise. In fact, we know it is just by looking at this stock, SCHW. This is Charles Schwab. Their business is built to make more profit when interest rates rise. As you can see, they've also had a breakout, but more important, they've just kind of been on the rise for the past 2 or 3 weeks. As inflation news keeps heating up, people feel like, hey, the Fed's going to have to raise rates at some point, and when they do, Schwab's going to benefit from it. So if Schwab is going up, it's because investors expect U.S. interest rates to rise, which also explains then why the dollar index is also moving higher, because people expect U.S. interest rates to rise sometime in the not too distant future. So if you've got the dollar going up because of expectations for interest, then and you've got technology strengthening in the U.S., then it's only going to be natural that USD Jpy, which had a very strong breakout, holding into a sideways pattern. At some point, it breaks this pattern right here. And if it does, then you've got a big potential move going this way. If it breaks the lower side, then you got all this way back down to here. So the real question is, how much of a trade, how much risk would you have to take in order to get in this trade? So like 113.72, if you bought it going long at that low rate, you could put your stop there at 113.15. That's going to be about 60 pips. So if you could pick up a trade that would only require you to take 60 pips risk, but it also had the opportunity of giving you about 130, 150 pip move in either one of these directions, and there was about a 50-50 either way, that's a trade you'd like. So I like the idea of the USD Jpy trade trying to play this breakout. You could probably do it even better in a 4-hour chart, but that's the setup. So markets are looking pretty good either way for growth with U.S. stocks or big opportunities that dollar strength is going to create.